Well, to talk more about that unexpected slowdown in growth, I'm joined by Yan Liang. She is a professor of economics at Williamette University. Thank you so much for taking the time to join our program today.
Thank you, Francis.
Well, first of all, let's talk about this slowdown in China's economy last month. What is your reaction overall, and how do you think the central bank's lowering of two key interest rates will make an impact, if at all?
Yeah, I think first of all, we need to see that that the economy is still expanding. The industrial output growth registered at 3.8%, just slightly slower than in June, which is 3.9%, and the retail sales was also growing at about 2.7%. Now, these numbers indicate that the economy is still recovering, still growing, albeit lower than the market expected. And that has a lot to do with COVID lockdowns and also the real estate market that has been slowing down. So I think we need to take this in the sort of balanced view. On the one hand, the economy is growing, is recovering, but on the other hand, yes, more policy measures are needed to help to boost that economic growth. I think the 10 basis point rate cuts on both the MLF and also on the 7-day repo are helpful because I think that does gives a positive gesture to the market. And also it helped reduce the debt service costs for businesses and for local governments. But I don't think it is going to increase credit growth significantly.
I also want to discuss the data about the dip in demand in oil in China, the world's largest crude oil importer, of course. What do you attribute to that number?
Well, I think, with the slightly slowdown of industrial output growth and also with the relatively weak domestic demand, I think that helped to reduce the demand for oil. So in some ways, this is a good sort of piece of news for the rest of the world as you see the oil prices gone down by 4.6%. So I think there's always two sides. One thing is we wanted to continue to bolster Chinese economy, but on the other hand, I think any relief on the inflationary pressure is good for China and also good for the rest of the world.
You wanted to mention some of the positive aspects of this report, and that includes good news in consumption as well as the import and export data that came out, up by more than 16% year on year. So what is contributing to that, and what kind of goods are we talking about here?
Yeah, when it comes to retail sales, what we've seen the most positive is the car production and sales have gone up by 9.7%, and I think that's really welcome for consumption demand. When you look at the data, including in the retail sales, what has dropped was mostly catering services, construction material sales, and also some of the furniture sales. So again, all of these have to do with the real estate market being slowed down. So many people was quick to point out the Chinese consumer confidence is still very, very low and so on and so forth. But I think really it has a lot to do with the reopening, the uncertainty, and the service sector they're being hard hit by the lockdowns. When it comes to exports, yes, in July the export grew by 18%, which is again really helpful to boost the demand for the Chinese economy. And I think as many of the observers worried about as U.S. consumers pivot towards domestic consumption of services, this might slow down China's export demand. But so far, I think we have seen evidence that suggests that China's exports are remaining very competitive, especially when it comes to comparing to the inflationary pressures elsewhere.
Really quickly, less than a minute to go. We're seeing how the markets are reacting to this report out of China. Give us a sense of what this all means for the global economy now and into the future as China continues this economic recovery from COVID.
Right. I think as far as Asian economies are concerned, the stock market's reactions were pretty mixed. You see Shanghai index were down, but Shenzhen index were up. So I think, many of the commentators worry, if China loses momentum, then this is going to, spill over to the rest of the world. Again, I think there are two sides to this question. One is that, China still has a lot of policy rooms, especially when it comes to fiscal policy. I think the central government can do a lot more to bolster, at least in the short term, to stabilize the real estate market. It really depends on, what the government is considering in terms of a balance act. And for the rest of the world, again, I think China continues to shift to the rest of the world low-cost products and also help to reduce the inflationary pressure on the commodity markets. And I think all these would benefit the rest of the world. But again, policymakers need to remain really vigilant to stem off that stagflationary pressure.
Yan Liang, professor at Williamette University, thank you so much for your time today.